Consumer confidence in the U.S. took a hit in February as the Consumer Confidence Index dropped to 98.3 from 105.3, according to the Conference Board. Furthermore, the index fell to its lowest level since June 2024. This news also had an impact on the stock market, putting further pressure on U.S. indices. For my current trade, this meant that I was able to further increase my profits. Right after the intro, let's take a look at my trading screen and see what happened in the markets. As you can see, this is my trading screen. For those of you watching for the first time, the chart is displayed in the top left corner, currently set to the 4-hour time frame, meaning each candle represents 4 hours. It is now 12 p.m. New York time, so the first 2.5 trading hours are already over. Due to the release of the Consumer Confidence Index, which triggered a market reaction, we have dropped from around 6,000 points and even hit a low of approximately 5,923 points. Right now, we are sitting in a support zone at 5,950 points, which I have marked in purple. This area has already attracted buyers at the end of January and the beginning of February. Now the key question is whether this support will hold. At the moment, the market is hovering around 5,950 points. For those who haven't seen my previous video, I entered a short position at 6,109 points because the market had struggled for weeks to break above the 6,160 point level. I expected a pullback, and so far, the trade is performing very well. Right now I am up around $6,000, which is a significant gain in relation to my portfolio. Of course, the temptation to close the trade and take profits is strong, and taking profits is never a bad thing. However, the markets have been rallying significantly over the past few months without establishing a meaningful new all-time high. And when a new high was made, it was quickly sold off. That's why I expect a larger correction and want to fully capitalize on this move, which is why I am letting the position run. I will continue trailing my stop loss, adjusting it based on market movements. Since we are currently at the 5,950 point support zone, we might see a short-term bounce as buyers step in. However, I believe this move won't be sustainable, and sooner or later, we will break through this zone to the downside. If that happens, the next support level would be at 5,840 points. Now, let's switch to the daily chart to take a closer look at the resistance and support zones. You can clearly see that the market failed 3 times at the 6,160 point level and has now dropped into the 5,950 point support. It briefly dipped below this level, likely triggering stop losses from buyers who had positioned themselves here. Right now, the market is fighting for this level. I expect a short-term move up, but the key question is whether the current candle will fully reverse. The market shouldn't exceed 6,020 points, as that could signal a stronger rebound. I'm curious to see how this develops. I have managed to recover my recent losses, though for now these are just unrealized profits. As you can see, my portfolio is now approaching $23,000 again. As you can see, the market has continued to move in the direction of my trade, allowing me to further increase my profits. Now I'm curious to see where the closing price will be today, whether we manage to close below the support line or remain above it. The next few days will reveal how the market reacts to this crucial zone. If you enjoyed the video and want to support me on my journey, leave a like, subscribe to my channel, and stay tuned to see how my Road to 1 Million project evolves. I'd love to hear your thoughts. Will the market reverse at this level and make another attempt at the all-time high, or will we see a further pullback? Drop your opinion in the comments. I'm excited to discuss it with you.